Hey there, and welcome to the Forex Collective. If you don't know me already, my name is Brian and I'm a Forex trader, and I have my own YouTube channel called the Forex Collective and my own signal service. So if you have any questions on that, check out my playlist on my channel or put a message down below or simply email me, where you can find my email in the description of this video. Now, first of all, sorry for not posting any videos for a while. I kind of got sidetracked with some other things. But I'm ready to get back at it, and I have a couple of videos planned, so be sure to stay tuned. So, what's this video on? Well, it's on one important topic, and that's the flow of money into one area into the other, and how you can forecast and predict that so that you can time your entries mainly into stocks and the different commodities to help your trade setup win probabilities. Now I'm going to have a future video on it right away, expanding what I cover in my trade signals. I've started expanding into stocks and ETFs, a few more commodities, and that puts some more emphasis on this type of forecasting that I've done, and I've actually started to expand on it from some learnings I just had from Gregory Mannarino. So I give a shout out to him on his YouTube channel. I'll put a link down below. And the chart I'm actually going to show you today is actually from his website, so go check out his website, traderschoice.net. So again, thanks Greg for making this, and it's been very helpful. Now, I've always done a portion of this, but I started adding on to it quite recently. So there's kind of 4 different things that correlate either directly or inversely, and those things are the dollar, equities like stocks and ETFs, oil, and then the 10-year yield. Now I'm gonna put up a chart here right away, but it really just is a flow of money. So that if you're looking at, say, the dollar, and the dollar starts dropping, so it's just supply and demand, right? So if something's dropping, that means there's no more demand for that. So why is there no more demand? Because people are pulling their dollars out of the dollar market, putting it somewhere else. Now, where would that be? Usually a dollar is safer, so if they're not putting it in something very safe, they're doing it in something riskier, as in stocks and oil. So that means when the dollar starts dropping, it's more likely that stocks and oil and other commodities are going to rise. The 10-year yield is actually the opposite. So as the 10-year yield rises, that means people are pulling their money, mostly the big institutions, out of that market, and it has to get put somewhere else. Stocks and equities, and oil and other things. So that's all it is. So let me pull up the chart right now. So here's the chart. Again, it's by Gregory Mannarino at traderschoice.net. So here we have fear, the 10-year yield falls, DXY dollar gains, which means stocks and oil fall. Over here we're getting greedier, the 10-year yield gains, the DXY falls, and stocks and oil now gain. And now that's all I'm looking for to figure out and forecast and predict where these markets are going. So if we were to look right now, the dollar is falling and the 10-year yield is gaining. It's probably making records for the amount of gains it's having on a daily basis. So I think the stock markets are going to go higher. And that's the trades that I've put out right now in my signal service. So I would recommend taking a screenshot of this to study it and memorize it. So let's go to my chart. So here is, so the 10-year treasury note can be viewed 2 different ways. They're more or less the same, TNX and the other TNX. So this is one that I put out to our subscribers. So I came with a head and shoulders pattern, came down, and then you can see I had this massive spike, and we're back on the upward trajectory. So again, this on the rise, which means stocks are probably on the rise as well. Now, of course, like anything, it doesn't correlate 1 to 1, but when you're looking at all these things together, it paints a picture. So again, this was falling, but it was more a range, very slow decline down. So that's why stocks were still able to rise. If we look at oil, again, because of that, it has started to rise. So that's the nice thing, there's usually a delay. So if we start to see the 10-year yield rising, that doesn't mean oil is going to rise that exact same day by the same amount. It just means it's setting it up for a future rise. So I'm still predicting oil to go up to at least 45, although I don't have an active trade in it right now. And of course, if we look at NASDAQ, you know, the second TNX had a huge spike, then that meant that the NASDAQ was also correlating and rising as well, and I'm expecting the NASDAQ to go higher. If we look at the dollar, dollar is clearly falling. It's probably going to fall a bit more. To what extent, I'm not sure yet, at least down somewhere in here. So again, we have the dollar going down, 10-year yield rising, stocks are poised to rise. Same with oil. So those are the trades that I'm in right now. And when sometimes these things kind of go against each other and butt heads, that's when it's maybe time to step aside. But when all these things are lining up together, then that's when it creates high probability trades. So there we have it. That is the 4 things that I follow to get a good sense of the money flow. And then there I predict which stocks and ETFs and sometimes commodities I'm going to get into. So if you'd like to hear more about this, please leave a comment in the section below. And of course, check out my other videos as I'll be posting some new ones right away. So I'll see you next time.